purpose of a pivot is to really identify shifts in market sentiment and changes in supply and demand. And so the price action will give us clues to that. And we'll look at both bullish and bearish price action pivots. Um, let's actually start with bearish pivot, as we've had some nice ones up here, up at a key level of resistance and previous all-time market highs. And we'll kind of discuss what's going on here. I'll zoom out actually a little bit more. There we go. And why this is so number one, what kind of separates this from a lot of other indicators is there's no lagging component, aside from that we're looking at past price, which we're all obviously kind of at the whim of analyzing based on what the past or current price action is. But aside from that, there's no lagging component to price action pivots, and so that's important. It sets it apart, and it helps us make more timely, informed trading decisions. So again, we'll start out with a bearish pivot and kind of the understanding behind why this is actually effective. So typically what you'll see when if markets are catching a bid and there's demand for an asset, you're going to see prices trend upwards, like we do kind of here over the course of about a week or so, right? And so buyers are outpacing sellers here, which is not to say there aren't sellers coming in during the course of this, we'll just call it about a week's worth of trade. But buying volume is outpacing selling volume. So when that happens, you'll typically see more bullish candles, which on this chart are notated by a green colored candle, right? And you'll typically see closes higher than the open. And the other thing you'll typically see is a series of higher lows and higher highs. Okay, so this all kind of indicates more demand than supply. Okay, now ultimately that sentiment will shift, and this is what markets constantly alternate between, right? Is excess supply, excess demand. So there's a shift in the supply demand curve, and the way to visualize that, right, is in that change is when sellers begin to outpace buyers, right, you'll see more bearish candles here indicated red and closes lower than the open. But I think more importantly is kind of opposite to what we talked about in an uptrend, is you'll start to see a series of lower highs and lower lows. Okay, so this is just a good indication of a shift in the supply demand curve. Okay, so with price action pivots, the intention is to catch that shift in supply and demand as early as possible. So what we're looking for with a bearish price action pivot is there are a few criteria that have to be met, and that is that previously we have to have excess demand, right? So where there's a prior uptrend and a series of higher highs. Now, for a bearish pivot, we're not going to concern ourselves with the low of the candle, right? Because we're looking for a prior uptrend and a series of higher highs. And so we have that here in this case. So at this point in time, we don't know a whole lot other than buyers are in control. Okay. Now this is where things start to change. So we put in a lower high. And in this case, the on this, and I should have mentioned, I am looking at a daily chart here, but the time frame really is irrelevant. But on this particular day, um, the Bears did take control, right? We closed down off the open. That's not necessarily while it may add a little bit of weight to the signal, it's not required. What's more important is that the the Bulls weren't able to achieve a higher high from the prior day. Okay, and this is where you'll often see a shift in supply and demand. It doesn't always result in that, right? This could have just been a one-day kind of pullback that could have resumed back to the upside. It of course did not, but that could have happened, right? So what we at this point in time, what we want to obviously take note of this shift in sentiment and the supply demand curve. Okay, and this is where we start our candlestick count. So because we've now put in a lower high, we want to notate this as a potential, the prior candle here, right, is a potential pivot candle. Um, and then we start the candlestick count. So we need to have two candles to the left of the potential pivot candle with lower highs. Okay, so this would be candle 1, candle 2. And remember, at this point in time, we don't know that this is a confirmed pivot. It's just a potential pivot on this day, which would be candle 4. Now, on the following day, okay, so this candle here, we have another lower high. Now, this lower high doesn't have to be lower than the prior candle, and it is in this case, but it doesn't have to be. It just needs to be lower than the pivot candle, which it is. Okay, so now we have a confirmed bearish pivot. Okay, we were in a prior uptrend making a series of higher highs. Candle 1, candle 2. This is now our confirmed pivot candle. Candle 4 and candle 5. All right, so we have now a confirmed, just going to box this in here, 5 candlestick pattern and a shift in supply and demand. So from there, and this is what the indicator and the algorithms are going to obviously calculate for you. From there, we want to look for bearish opportunities. Okay, we're expecting that shift in from excess demand to excess supply to persist. And so we're gonna add a little bit of confirmation into that in terms of making a trading decision or entering a trade. So rather than just jump in, going short, we're gonna also wait for a little bit of follow through. For any of you who are trade trend indicator users, this methodology is the same, right? Using a sell stop order below the low of the lowest low in the 5 candlestick pattern. So that's going to be candle number 5. So again, we'll look at the expert commentary. That's where you're going to find the exact entry price. But here's where we want to enter short. And so the indicator is going to give you I'll kind of go over the symbology here. Is first of all going to give you notification that there's a confirmed bearish price action pivot. So that's going to be that kind of sideways, sideways slanted red arrow. Okay, so this is just indicating that we have a completed confirmed bearish price action pivot. Oh, sorry. 1 second. My phone picked up what I was saying and tried to give me some information on technical analysis. I apologize. Um, so you'll then see a vertical down red arrow. This indicates that on this particular day, this candle, we had follow through to the downside and reached our suggested entry price. Okay. So not every pivot necessarily will result in follow through. In fact, here was one previously, okay, where we did have a series of higher highs. We have a confirmed pivot with a series of lower highs to the right of the pivot. So this is a confirmed bearish pivot, and there's the indication of that. Entry would have been probably somewhere down in this area. Okay, but we didn't follow through. And this is kind of the nice, this is why we use that technique of a sell stop order for a bearish price action pivot or a buy stop for a bullish price action pivot, because we want added confirmation and follow through in the direction. We didn't get it here, so no harm, no foul. We wait for the next signal, so we get another bearish pivot. We actually had another bullish pivot. It doesn't indicate that because we already had an open one from back here. Okay, so this would have also just kept you in this long position if you took a trade off of this previous bullish pivot. All right. Now, let's talk a little bit about trade management. So roughly here's our entry. Okay. The algorithm is going to calculate a stop above the pivot high. And it's then going to calculate a profit target that is equidistant from your entry and the stop. Okay, so it's looking for a 1-to-1 risk reward. Now, that doesn't mean that you have to completely adhere to that. You can, what I often like to do is, take profits on half my position at the 1-to-1, and then I'll often leave the remaining half of the position open for a runner and manage that with like a trailing stop. Okay, so that's also an option. But you can see when we do hit the 1-to-1, you'll see that we have an exit here. Okay. So that is a bearish price action pivot. And you're going to find all of the details and instructions inside the expert commentary. So you just go under the view tab up at the top of the Metastock platform and select expert commentary. That will open up a window. And this is where you're going to find all of the instructions, right? So if we go back to February 21st, when we had this bearish pivot, right, you're going to find the instructions. Where it says, let me get my drawer back, right? So this is a new pivot high. So there's a pivot setup for a new potential short position. It's going to give you the targeted entry price, projected profit target, and it's also going to tell you that the setup should be ignored if price goes up to a certain price level, or if an opposing long entry signal occurs. Okay, so that's all going to be found within the expert commentary. All right, which is very handy. I like how Metastock does this. Okay, so basically all the opposite rules apply for the bullish price action pivot. Okay, so previously you have to have a series of lower lows, right? So we had prior excess supply, followed by a shift in the supply demand curve, right? So this is where the SPY is starting to catch a bid, and uh, buyers start to take control over sellers who were previously in control. The SPY is not able to put in another lower low, right? So we now have a higher low. This is our potential pivot. Okay. We just need one more higher low. We get that here. And we now have a confirmed bullish price action pivot. Okay, so I won't go through all the other nuances again because it's really just the opposite of the bearish price action pivot. Symbology is also the same, other than you're going to see a green slanted arrow for a confirmed pattern, and then a vertical green arrow, up arrow for a confirmed entry. All right. So that kind of covers the methodology, the symbology. Now, I want to also kind of throw in some tips. So certainly, like any indicator, you could just take these trades, trades off these signals blindly. You could just, there are traders out there who just let algorithms run and take every trade without any kind of consideration of the context of the trade. I don't prefer to do that. I prefer to look at these pivots in context. So one of the kind of key things I like to do is look for a bearish price action pivot off of a key level of resistance, or look for a bullish price action pivot off of a key level of support. And so we'll just go back to the sell signal because it's a great example, right? We have this kind of area of resistance up here, right? We've also had prior bearish pivots up in this zone, price zone. Okay. So if you get a bearish price action pivot off of a resistance level, and we won't go into a whole lot of detail on analyzing support and resistance, but essentially a level of resistance is where there are repeated attempts for price to move up, from the downside. They reach that price level and then subsequently rotate lower. Okay, and so if you see that occur a number of times, and generally the more that occurs, the stronger the level, more significant it becomes. Okay, so we have all this resistance up here, and so this is where I kind of like to filter out and give more weight to certain signals. So this was a great bearish price action pivot setup off of a key resistance level. Okay, and then of course you can just use the same methodology for a bullish price action pivot, right? So just kind of looking for kind of key areas of support. And I'm just kind of see if, we had a number of them here. This was a lot of kind of sideways consolidation, but a very strong level of support, and then obviously ultimately a trend continuation. So here I'd want to be looking for bullish price action pivots, for a trend continuation. So, here's another, right? We've got kind of this zone of support down here. Price moves in from the downside. We actually had a bearish price action pivot into this support level, and then a bullish price action pivot and a reversal shift in supply demand. Okay, so again, just to reiterate, looking for bullish price action pivots off of key support, bearish price action pivots off key resistance. The other thing is looking for obvious, trend moves. So you're going to typically find your stronger pivot signals following a prior significant directional move. Okay, so they can be used in trend continuations. I mean, this was a very well-defined uptrend with very little downside retracement, and there was many bullish pivots here that were tradable. But then if you look at kind of this type of chart, there's some great signals in here as well, pivot signals. Um, this would be a great bullish price action pivot because it was previously followed by a significant bearish trend. Okay, so these are when you get, extreme kind of divergences in supply and demand. So there's obviously a lot more, sellers are well in control in this downtrend, right? The more dramatic typically the shift of supply and demand is going to be. So when the SPY or whatever market or asset you're looking at does catch a bid, the the subsequent moves is going to tend to be more significant, and we saw that here with this bullish price action pivot. Well, I hope that was useful, and obviously, if you as you get comfortable with the indicator and use it in the live markets, if questions come up, you're always welcome to reach out to us at Altos Trading or the Metastock support team. They have a fantastic support team that we're all here to help you. We obviously want you to be successful with the price action pivot indicator. So I hope that was helpful, but of course, always feel free to reach out.